Welcome students. In today's lecture session, we will discuss the structure of Indian banking system. As we know that banking system is an important pillar of the economy that holds up the financial system of every country. The economy of the country also depends upon the strength of its banking system. So there are two sectors in banks, the organized and the unorganized. Today we will discuss the organized part in this Indian banking system lecture session. The figure shows the Indian banking system. The banking system is regulated by RBI, that is Reserve Bank of India. It is also known as the Central Bank of India, and RBI performs development functions and promotional functions. It has a full power to supervise and control Indian banking system. So as shown in the figure, the banks which are included in the second schedule of RBI Act 1934 are known as the scheduled banks. These banks are eligible to borrow from RBI. On the other hand, the banks which are not included in the second section of RBI Act 1934 are known as non-scheduled banks. The non-scheduled banks can only borrow from RBI during any kind of emergencies. And the third type of banks are the development banks. Now we will discuss these types of banks one by one in a detailed manner. We can further divide the scheduled banks into commercial banks and cooperative banks. The commercial banks accept deposits from the public and advance loans with the main aim to earn profits. The commercial banks can be public sector banks which has majority share of the government. There are around 12 public sector banks operating in India. SBI, PNB, PSB, etc. are the examples of public sector banks. Then are the private sector banks where the majority of the stake is owned by the private stakeholders. HDFC, ICICI are the examples of private sector banks. The third type of commercial banks are the foreign banks which are located outside India, or we can say whose headquarters are located outside India, but they operate under the RBI guidelines in India. The Standard Chartered, the Deutsche Bank are the foreign banks that operate in India. Then for the development of the rural regions, regional rural banks were established in 1975 with the main aim to uplift the rural regions and to assist in agricultural and other small scale industries. These banks are jointly owned by the Indian government, the state government, and the sponsor bank. Next kind of banks under scheduled banks category are the cooperative banks, which belong to its members who are both the owners and its customers. The cooperative banks provide financial and banking services to its members to support them in various agricultural activities and in other small scale industries. These banks are located both in rural as well as in urban areas. The rural cooperative banks can be the state cooperative bank, the district central cooperative bank, and primary agriculture credit societies. As we have discussed in the definition part, that non-scheduled banks do not adhere to the RBI regulations. The reserve capital of these banks is less than rupees 5 lakh, and there are many such local banks operating in India. The Bangalore City Cooperative Bank, Baroda City Cooperative Bank Limited are few examples of non-scheduled banks that operate in India. The third important component of Indian banking system are the development banks. These banks provide long-term credit to support capital investments. IDBI, FCI, Exim Bank, NABARD are major development banks. I will have a special lecture session explaining the functions performed by various development banks. So we can conclude that banking structure and system of a country heavily influence the development of country's economy. The banking system is also instrumental in development of rural and semi-urban areas by providing capital to small businesses. Thus, the banking system not only helps in economic growth but also promotes economic equality. So, this was all in today's lecture session. Thank you.